Okay, today we'll be discussing the candlestick model, shredding light into things we are looking at is picking the right chart, looking at the Japanese candlestick patterns, looking at the fundamental versus technical analysis on those things, and we're looking at the price action which creates the candlestick, pattern recognition, identify formation and pattern at key levels, understanding what to do once the pattern arises, understanding the analytical differences between fundamental and technical. So if you look at the chart, great for tracking average price movement. If you look at support and resistance and technical analysis. Yeah, so basically what you have is, support and resistance is very important because what that it does is, the concept is there. Golden egg for technical analysis. To if used correctly, then you can use it to put to your arsenal important key levels. So there are different technical and fundamental analysis used to traders. Analytical should be adopted by beginner traders. And then the lesson is, we're learning some signal Japanese candlestick pattern will help us pick up some fantastic trading opportunity on the day-to-day basis. Understand what factors affect those two methodologies. So in terms of candlelight, it's probably the most visually pleasing chart you can look at day-to-day places. Open, high, low, close, but the only difference now is that there's a body or box drawn out between the open and the close. So it's the body and the wick will be red, the other one will be green. Being able to bodies candle help us pick the impact of price movement as analysis view as new traders. Candlestick pattern, you can see the characteristic by a bullish candle whose body engulfs the previous candle. This is the bullish engulfing pattern. They're characterized by bullish candles whose body engulfs the previous candle's body. It is a good indicator of the possible price reversal relatives to the time frame that it's created on, and significant at the end of the downward push. Then you have the bearish engulfing method where the body engulfs the previous candle body. So that's the bearish. It's a good indicator of possible price reversal to the downside relative to the time frame, significance at the end of an upward push. Then you have the hammer. There are real bodies at the top of the candle ranges. They have the long lower shadows and small real bodies. So it should have no very short upper shadow, and the colors of the formation are irrelevant, and the pattern is significant when it emerges during the downtrend, indicates trend reversal. So this is the downward trend. Then you have the hanging man, which the real body are near the top of they have long shadows and small real bodies. So it should have no very short upper shadow. The color of the formation are irrelevant. The pattern is significant when emerges during the upward trend. So fundamental analysis, evaluating assets and releasing the factor price in the future. Factors are what really matters because define the methodology. So let's have a closer. Certain events like counties increases the unemployment rate. Okay. Currency should be important. Company report. Investors who have interest in purchasing stock because of underlying values. Media influences, also representing true coverage of reports. Environmental influences are there, supply and demand of agricultural commodities. rise in prices of fruits and stuff. You can see here we have the bar graph over here, candle, fantastic detail over here, visually pleasing, high, low. Here we have the upper shadows, closing, this is open, this is the bearish, this is the other one. So lower is the lowest price, upper is the highest price. Reversal, I think the old trends of reversing. Trend reversal occurs slowly and in stages. So these are the how trends are changed. We talked about this one, engulfing bullish upward pattern going on over here. You can see you have bullish candle hold body previous candles. Then you have the bearish engulfing that we talked about, and this is the downward trend on the bearish taking place, followed by a bearish candle previous body. This is the hammer that we talked about. So here we have a hammer pattern, downward trend disturbance going on over here. So you have the hanging man, the real body, top of the range. They should have no upper shadow. The color pattern emerges during the upward trend. So here, upward trend. So then you have the V formation up to 3 candles right here. Your candle starts off at any candle, you must close the lower and then goes to the higher one and highest one. Pattern is an indication of political bullish move. Yeah, those things. Can you spot the V formation? So here we have the V formation happening, and then you have the inverse V formation, 3 candlestick. Starts off at a candle, higher, lower, must, and candle 2. For opportunity in structure of support and resistance, technical versus fundamental thing we talked about. Then you have political influences we talked about. We have the company reporting where you talk about cost management, business performance, media influences, fiscal policies, environmental shit. Use of charts to analyze data, resistance turn to support. So you can look at concepts, selling, market versus vice versa. You have closest low initial opening, selling will be doing more based on speculative view, going down between entry level, take profit level. And then we have like these direction bias taking place. Should be buying and selling in upward or downward trend, determine directional trend bias. How may you ask? So different approach you could take. One is EMA, exponential moving average. It is that follows price in real time. Always look at the historical data. Always pairs using trend filters and EMAs, and we will just be looking at how they can assist us in trend filter. Choosing the right EMA, it comes with practice over time. Big role to EMA, take into consideration moving line out. When 2 EMAs are being used as a trend filter, a smaller number is considered a fast EMA and the large number is considered a slow EMA. Then the colors of EMAs are irrelevant and stuff. Price action time frame, 1 bar, 1 specific period. Time frames are generally scalpers who want to place many trades on the opportunity or setup. 15-20 minute daily chart taking place. One single bar change over a week because while close short-term patterns and you get higher time frame. Macros have potential be large sum of money. You want to take 1,000, 5,000, it won't be a problem. Your broker would set aside 1,000 deposit and can benefit the traders. Aside from pay potential losses and 1%, 1,000 traded broker 1,000. This is a deposit on the finance position. The standard size is a lot of 10,000. There are micro. You're probably wondering now, I understand lot leverage margin, how to calculate my position, and we have one of the best way calculator you can use. Let's trade. Use position calculator. Produce a consistent accurate profit month to month. Technical to assist the traders. We have the Fibonacci's retracement going on, and we're looking at historical data leading to more formation of analysis. Let's try candlestick pattern learning in this lesson. One of the candlestick pattern learning in this lesson. This is the inverse V formation. This is the bullish formation, and we have the V formation over here. And here we have the bearish engulfing pattern. Then we have the hammer pattern, hanging man pattern up here. So in summary, we looked at charting variation, reversal pattern, and formation, drawing biases, understanding the analytical difference between fundamental and